crossing that key 25,000 mark. What do you see this doing in terms of the psychology of the investor right now? Is it igniting a bit of confidence in the Nigerian markets at this stage?
Yes, I think it is. I think it shows the growing confidence, especially among local investors. I think there's a belief that AMCON is going to become operational in the next few weeks. And I think also the plea bargain agreement of Oceanic Bank and the Oceanic Bank MD has ignited interest in the rescued banks. So I think those two factors, as well as some regulatory moves by NSC to clean up the market, has sparked up confidence in the local investors.
Well, we've been looking at the fast-moving consumer goods sector as well in tandem with the kind of developments we're seeing on the banking arena, and we were exploring the extent to which we could possibly see some sector rotation coming to the fore with confidence re-emerging. To what extent do you see sector rotation coming into play, investors moving out of the fast-moving consumer goods space and back into the banking arena?
I think it'll be quite limited at the moment. I think we are seeing some movement in terms of some investors going into looking to moving back into the banking sector. But if you look over the last week of the NSC, although the All-Share Index went up about 5.5%, if you looked at it, the food and beverage sector went up over 10%, while banking only went up about 5%. So I think there's still strong interest in the food and beverages until the announcements of any deals in the rescued banks. I don't think there's going to be any movement there.
Strong interest within that space, but what are you making of current valuations where, as you've been highlighting, we've seen the sector running hard on a week-on-week basis?
I think the valuations in the food and beverages sector are, if you look at the 5-year historical, are still quite low compared to that. They're going up. They are being highlighted now because compared to the rest of the sectors in the NSC who are not performing as well, it's showing as a rapidly moving sector. But I think going forward, looking at the Nigerian economy, looking at the consumer economy, the growing consumer demand in Nigeria, as well as the size of the population, I think that sector has a lot of growth to go.
Yeah. What kind of leverage do you see some of the local operations, a player like Unilever, actually gaining from offshore businesses, their parent companies, if things, kind of stumble along? Do we see that lending arm supportive of the Nigerian operations? Because one would assume that would bring some reassurance to the investors' minds.
Yes, I think most of the multinationals like Unilever, you mentioned, Nestle, have been in Nigeria for many years, and they've had good, strong parental support, and I think that support will going forward. I think that's a succor to a lot of investors who were looking, especially when the market was down a few months ago, who were looking to, if firms like that they know will get parental support, and that gave them some confidence in investing in those stocks. I think going forward, likes of Unilever and Nestle have a long-term plan for Nigeria, and they see Nigeria as a very good growth country. I think the support will be there.
For the short term, we've seen quite a nice stability emerge from a cost perspective. And I was speaking to a trader last week who highlighted that the amnesty program has ensured stability for the past year. And with that, the ripple effect has been that these manufacturers' cost of production has been stable. Run us through that dynamic, Kayode, and to what extent it's offering relief for manufacturers over on that end.
Basically, in terms of manufacturers, one of the big factors that affects them is the power sector. Now, with the amnesty that has been going on for a year, has been fairly successful, power has stabilized, especially in the last few months, and we're seeing better periods of stable power supply to a lot of these industries, especially a lot of these industries, especially in the Lagos corridor, that rely on gas. So there's been increased gas supply to them, so there's more stable from that front. I think that's really helped them as well. I think also in terms of confidence in the sector, in making investment cases to invest, I think with the amnesty and the slowdown in violence associated with that, I think they've been able to make investment decisions, and you've seen the likes of flour mills announcing a bond issue, different companies announcing expansion, Lafarge announcing expansion to their plants. I think that has shown the confidence in the sector, and that's helped things as well.
Looking at the impact the currency market has had on this space, I mean, one would assume it's a bit of a challenge because Nigeria is a net importer, and we've seen the currency move from levels of 150 to about 153, 154, and beginning to raise a concern that there will be more devaluation on the cards where forex reserves have been depleted and excess crude account will be fully drawn demand.
Yes, I think currency is going to play a big role. I think normally every year around September to November time, there's pressure on the currency because a lot of importers are making big payments for the Christmas period, and so you see a lot of demand. The demand for dollars, especially, spiking up, and now. Also, in converse to that, it's normally CBN and the major oil nationals and NNPC that normally supply dollars to the market. Now, what we've seen is that a lot of the oil majors have not been supplying as much dollars to the market as usual. And this is, many people say the reasons for that is they've slowed down investments, waiting for the PIB to be signed so they can know what the investment climate is going to be. And there's been a drop in some oil revenues in terms of the budgetary allocations. Now, in terms of what normally then happens at Christmas is there's a lot of people, Nigerians who live and work abroad, come back to Nigeria. They bring a lot of dollars with them, which they convert to Naira. So that stabilizes the currency around Christmas time. Now, with the global credit crunch and the way the international market is, whether they'll be bringing as much money as they normally do to be able to stabilize Naira is up in the air.
Talking about potential capital inflows into the country, I mean, how are you sitting on that end over in Nigeria, reading this whole fallout that's happened between HSBC and Nedbank? Because, many saying if the HSBC is concerned about the risk, for example, in Nedbank's book, then they're obviously not going to go for some of the Nigerian banks or some of those sub-Saharan Africa banks. How are you reading that news that's emerged and what it could spell for M&A activity over in Nigeria?
HSBC has always had a very conservative outlook in terms of M&A, and their approach to Africa especially has been very conservative. So it hasn't really been that much of a surprise in those terms. I think in terms of M&A in Nigeria, I think the big fill-up is going with the power sector reform. We had a big conference with the president last week where a lot of power sectors, especially a lot of companies, announced they're willing to invest billions of dollars in the Nigerian power sector as long as they know the regulatory framework and investment climate is going to be steady going forward. I think if the government can encourage them to do that, I think the capital inflows there would be very interesting. I think one big inhibitor to capital inflow is the bomber blast that happened earlier this month, and also the forthcoming elections and concerns about potential violence. I think that is discouraging some international investors who want to wait until after the elections before making any major investments and bringing capital into Nigeria.